Okay, so let's take a look at the euro dollar right now. Okay, let me just delete this trend line, it's not valid anymore. Now, this is the euro dollar weekly chart. You can see that it's still in a big fat consolidation. So what happened was that last week when it broke a low, see this low here? This low. So see when this low broke this low, okay, I was anticipating some sort of a pullback and then a start of a new downtrend. Okay, it might still happen, but because of this big green candle here, I'm a bit more cautious because fundamentally, this is where I combine fundamental and technical analysis. Fundamentally, you can see that the very poor NFP data has almost brought the possibility of the Fed hiking rates in June to zero. Okay, the Goldman Sachs is still positive that they might hike rates in July. However, consensus, most analysts are saying closer to end of the year. Again, who's right, who's wrong, that's not our problem as traders. Okay, again, they're all opinions. They're all opinions. But what you should know as a retail trader is the levels and what to look out for. Yep, so this is what I'm looking out for. Now, key thing is, again, this 11450 area to 115 area. This is a very key level. Alright, because every time you notice all these circles that I drew last week, every time the market flirts with around the 1150 to 115 area, it drops. Alright, what does this mean? It means that there's a lot of selling pressure at those levels. Okay, so if that's the case, it will work inversely as well, meaning that if the market is able to clearly break this level and there's a candle close above this level, it's a green candle for example. Okay, if there's a candle close above this level, then it's very significant. Because look at all these circles I drew here. There's no really a clear candle close above. And whenever the market went above, the candle came back down and formed a long shadow, which means there's a lot of selling pressure. Okay, so if there's a candle close above this level, then you need to be alert enough to say that this key resistance has been broken, and most probably the bulls will be in charge and might push it euro dollar to 1.2. Okay, so I had this conversation with a trader the other day. I said that 11450 is quite key resistance, and if it breaks, I'm not surprised if you see euro dollar at 1.2 by the end of the year. And their particular trader said that, oh, no way, it's impossible that euro dollar will go 1.2. They used the Greece problem, now the problem in Spain, unemployment rate is too high, the GDP is not doing well, blah 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 blah. But again, all these are his opinions. Okay, whether he will put his money or trade based on his opinions, I wouldn't know. But as a trader, I take that just as opinion. It's not. It can be wrong. It can be right. Doesn't matter. Okay, I follow my chart. The chart will tell me everything. So this is the key level that I'm looking at. Okay, but if it fails again, then most probably we are looking for further consolidation for the next few months or so. Okay, if you want a shorter term trade plan, the euro has a shorter term trade plan. So this is a weekly chart, right? Now look at the daily chart. You can see that this big green candle here. Okay, you see this big green candle here? So you can see that it's almost reversed the previous momentum to the downside. And I'm looking for it to retrace maybe back to the support level anywhere near the 11330 again. And then see what gives. Maybe you can buy it back up again. Okay, so that's the daily chart. On the 4-hour chart, you can see here. So you can see that it consolidated between this level here and this level here. Okay, so when it comes back to near the 11330 level, alright, you can look for shorter term charts and try to buy up, maybe back to previous high, or maybe it will test the resistance back to 11450 again. Okay, so that's euro dollar for you. Any questions? Yeah, you guys can hear me, right? I got about almost 30 people in the room, but not many questions today, except for John. What is your MACD signal? As in the setup, or what do you mean by MACD sync? Sorry, I don't get that. Srinivas, thanks for coming. Why can't we trace to 112? Oh, Sunil, what's your MACD saying? Not saying much at the moment. In terms of the weekly and the daily, it seems to be converging. No divergence, nothing. So I couldn't read much into the MACD. Okay, but shorter term trade, I'm just looking for a pullback here again. Okay, yeah, speaking of the euro dollar, right? Now, let me just zoom in a bit. Let's go to 1 hour chart. Okay, now this is a classic example where some of you can analyze and see whether it fits into your trading strategy. Okay, every time when a previous, every time when a US session has a big move, right? The Asian session tend to retrace before the European session continues the previous US session move. All right, let me just draw something. Okay, so let's say there's a big move like for this case, right? The NFP was really bad on the Friday night US session. The market just boom, shoot up. And when the Asian market opened the next day, or for this case Monday morning, normally it's a bit lazy trading and starts going down, and it hits some form of support. And when the UK session kicks in, boom, you start going up again. Okay, so this happens many times. So if I divide the little drawing here, right? Okay, so this is the US session, this is the Asia session, and this is the UK session. Okay, so this is called a Asian fade, F-A-D-E, Asian fade. So I sometimes I use this strategy to combine with my analysis, and that's work most of the time. So you can see that the market shot up during US session here, and this is where the Asian fade came in. See, lazy trading, hit some form of support here, boom, shot up. It need not continue the trend that strongly, meaning to say that let's say if you buy the Asian session, doesn't mean that it will just break the previous US high and just go all the way up. Sometimes it does, but sometimes it doesn't. But what I'm saying that if you are alert enough to be able to spot this Asian fade strategy and look for nice support levels to buy to follow the trend in the Asian session, you can just target the previous highs, and that's your intraday profits for you. Okay, so it did not shoot all the way up again, like for this case, but you can just look for the previous high to take profit. Okay, so something to look out for in terms of the Asian fade. Very interesting setup. All right, Srinivas, why can't we trace to 11230? Where's 11230? 11230. Okay, 11230 is quite far off, no? It's somewhere here. Well, I mean, for me, it's just the nature of how the candle is right now. Okay, now this is a very bullish move in terms of for euro dollar. Okay, so what I expect is depends on what kind of trade you're taking, whether is it intraday or swing trade or things like that. So because of the bullishness of this candle, I expect every level of support to be to have boost to try to buy it back up again. So that's why this level here around the 11330 or 20 level, I expect that it might make another push up and then see what gives. Okay, because your 11230 is it's quite a long way off. If it comes back all the way down here, then I'll be more cautious. I'll be a bit more cautious with it. Okay, because you can see that 11230 is somewhere here. So if the weekly candle comes back to 11230 and the candle closes there, then I'll be more cautious because that candle will have retraced the whole week's bullish candle by about 75% or so. You get what I mean? So just be a bit careful. So I'll expect some kind of support to push it up again, and then from there we'll see what happens. 11230 just a bit too far for me. Let's go to the lower time frame. All right, look at this candle. Very strong move. Okay, so there's a lot of support between here to 11230 for bullish buyers to push it up again before come back down. 11230 is all the way around here. Okay, quite far off. Yep. I hope I answered your question, Srinivas. Brian, would you consider that a head and shoulders? Where? On the daily chart or 4-hour chart? Head and shoulders. Let's see. You mean the top here? The slanted head and shoulders? Where's the... Okay, yes. Oops, sorry. So you're saying that this is the head, this is the shoulder, this is another potential shoulder, and the neckline is below here. Yeah, if it's not the nicest one, yeah, I guess you can. The shoulder, I mean, whether you take it as a head and shoulder or not, I mean, this is very clear cut that this 11450 area is definitely key resistance on the daily chart. Okay, so yeah, I guess you can take it as head and shoulder. It's not the nicest one to me, but it's still undeniable that this area here is very, very key resistance. So I'm paying very close attention to it. Around the 11450 to 115. All this is very, very key resistance. Okay, so there's a euro dollar trade plan. Shorter term intraday, there might be a setup. In terms of weekly, okay, I'd rather let it break the 11450 resistance clearly first before taking it up. In terms of daily chart, same story. Same story. Okay, so that's the euro dollar for you. Now, any of you trading the pound, just be a bit careful of the pound, okay? Because there's a lot of rumors, like today the pound dollar shot up for no reason, and some traders got caught unaware. So just be a bit more careful of pound, because it's quite tricky. If the case in point, I mean, if you look at pound CAD, for example, okay, if you look at pound CAD, the daily chart, okay, you look at the manner it rallied for the past week or so, and then that was when there was talks that Brexit, the pole of Brexit is more dominating, so that's why pound shot up. And for the past few days, it's the other way around. All right, the Bremen, Bremen was the previous few weeks, that's why it shot up. But the past few days, the Brexit the Brexit was more dominant. So in terms of the poll, so that's why it came down. Okay, there are all kinds of polls being done there, surveys, polls by newspapers, by media. So it's really, really whipsaw trading for any pound pair. So just be a bit careful on that. Okay. So that's euro dollar for you. The trade that I took today, I only took one trade, was Kiwi dollar. Okay, simply because again, any dollar pairs was affected by the NFP, right? So what I like about the Kiwi dollar is that it made a nice push up on the daily chart. And if you look at the weekly chart, okay, there's still some way to go to hit resistance at around 70 cents. Okay, there's still some way to go. And the weekly chart is still on a nice uptrend. See a consecutive series of high lows, high lows, high lows. So I like that. It's made a high as well. So there's still some way to go before it hit the resistance at 70 cents. This is a weekly chart. On the daily chart, you can see that, all right, because helped by the NFP news, it so-called reversed itself to the upside. Okay, it's a nice spike up. Okay, but it's still a form of very strong bullishness. If you look at the 4-hour chart, okay, you can see that the market was consolidating in a flag today. Okay, so everything seems bullish, everything seems nice. So how I took the trade is on the, so this was the 1-hour chart. So this was the consolidation, right? So I took a trade based on nice bullish flag pattern, and I was looking around here. UK market open. If you see the 15-minute charts, right, you can see the reversal here. Very nice. Look at that. Nice V-shaped reversal, higher high, and I took it a higher low here. Perfect. Stop loss somewhere about below the 786 Fibonacci retracement of this swing, so somewhere here. Okay, and it went up all the way. So pretty decent trade. Alright, so I'm just going through my thought process step by step on how you can take intraday trades and things like that so that you can understand. If you guys don't understand why I took the trade here or what was I looking for, please feel free to shout out. Okay, a good webinar is whereby it's more interactive. If not, it's so boring. I attended many webinars and I can't last more than 15 minutes. I'll fall asleep. Okay, so feel free to ask questions and you can disagree with me and I'll try to explain myself more clearly. Okay, so this was a nice reversal. Any of you don't understand? Any of you do not understand why I say this is a nice reversal to the upside? If you don't, please shout, yeah, because this very nice price action in terms of reversal. You can see that this was you can see that this was the previous high, and the high was broken. So a high is the first sign of the uptrend reversal. Okay, so this was a nice setup on the Kiwi dollar for intraday kind of trade. Right now, I'm a bit more wary because on the 4-hour chart, there's a bit of divergence coming up. You can see that this is the high. It has made a new higher high on the price, but the MACD still a lower high. Okay, so there's a bit of a bearish divergence on the 4-hour. On the 15 minutes, like John said, there's a bit of divergence as well. Which divergence? I don't see any divergence, John. Oh, bullish one. Oh, okay, okay. Oh, the one I took, yeah. Yeah, slightly because it has made a yeah, I know what you're talking about. It has made a lower low here, but it's made a bit of a double bottom here. Yep, you're right. You're right. So John was saying that and another reason why my entry was decent is because there's a so-called slight bullish divergence on 15 minutes as well. So that's that. Let's see. Hey, Mr. Wu, thank you so much for coming. It's been a while since I saw you. Aussie Kiwi, is it? Okay, let's go to Aussie Kiwi. Aussie Kiwi, Aussie Kiwi. Let's see, daily. Just go to weekly chart first. I've not really seen this pair yet. Weekly chart is quite ugly. It's just consolidating sideways. It's a huge head and shoulders. So you can see that the head is here. Nice big shoulder here. Nice big shoulder here. Okay, so it's a very big head and shoulders pattern on the weekly chart. Alright, so let's get that away. Okay, key support level that it bounced off, not surprisingly, is around the 105. 105. Let's go to the daily chart. Okay, so the daily chart, nice downtrend. Okay, bounce off support right now is retracing back, still in a downtrend, unless we break the high of 107.50, but definitely still in a downtrend. Okay, so let's see the lower time frame now. Let's go to 4-hour chart. 4-hour chart is showing a bit more sign of reversal. Okay, you can see that we made a new low, but this is a huge, this is a one big U-turn. All right. Let's see. There's this chart pattern. What's it called? Cup and handle. You guys heard of cup and handle? It's not some chart pattern. It's not really a chart pattern that I looked at, but I read it in articles before. And when I took my CMT, I think I studied it, but I forgot. But anyway, cup and handle is I think it's a reversal pattern. So this is quite clear cut, isn't it? All right. So this is the handle, and this is the cup. Yep. Correct. Yeah, you're right, Mr. Wu. It takes a long time to show. Okay, there are a few chart patterns that there's quite low probability to materialize. I mean, one of them, I mean, this is all theory. Okay, I think based on my experience, I agree as well. That's why for me, trend line chart patterns is secondary. For me, primary is still key support and resistance first. Okay, so head and shoulders is one of the chart patterns that has not the highest probability of materializing. I think cup and handle is another one. So just be a bit more mindful of such chart patterns. Always combine it with price action and support and resistance. Okay, so that's your handle, that's your cup. I think if it breaks this resistance area, right, 10730, then we might make a push higher. Okay, let's see the 15-minute chart. Oh, let's go to 1-hour chart first. Nice. I think on the intraday wise, the 1 hour is trending very nicely. Very nicely. Okay, you can see higher. This is a classic uptrend, yeah. Higher low, higher high, higher high, higher low, higher high, higher low, higher high, higher low. So let's see whether there's support here to try to take it up from. Yep, we are approaching that level. So anywhere near 106.80 to 107. Alright, what you can do is look for a reversal on the lower time frame, maybe 15 minutes, and then you can try to take it up again, maybe back to the previous high. Okay, any divergence? No divergence here. Let's go to 15-minute chart. Yeah, you can perhaps target somewhere the previous high, about 20-30 pips kind of trade. Divergence, yes, very, very clear divergence. So you got a higher high, a higher low here, but you got a lower low here. So that is a bullish divergence. Okay, this is a nice big bullish divergence. Okay, so yeah, thanks for pointing out, Mr. Wu. This is Mr. Wu's Aussie Kiwi trade plan. I think the support level around the 106.80 will be nice. Okay, maybe you can take it to push it up back to the previous high here. Nice bullish divergence on the 15-minute intraday. Okay, so yeah, good intraday setup there. Good intraday setup. So let's see, for divergence, what should be a good time frame to look at? 4 hour. It all depends on what time frame you are trading on. Okay, if you're trading intraday, I would say 15 minute, 1 hour, 4 hours is important. If you are trading swing trades, then 4 hour daily, weekly. Okay, so it really depends on what's your expectation and what you are trading. Also, for example, if I'm taking the Aussie Kiwi as a 15-minute intraday trade, right, there's divergence on the 15-minute, 1 hour, or 4 hour. I'll be a bit more wary. Yep. Okay, cool. Let us move on. So the pound, any pound pairs, so please be careful in terms of the Brexit talks. Yeah, it can move anytime. You can move anytime, okay? And just a bit of admin information on the 17th of June, which is 2 weeks from now. I think it's a Friday. All the pound pairs will be increasing the margin from 2% to 3% because of Brexit. Okay, I think all the brokers are very, very worried about Brexit because the manner the pound move is just crazy. And when it comes to Brexit talks, anything can happen. Anything can happen. Okay, so that's Aussie Kiwis. Let's move on. Let's go to what other pairs you guys have in mind? Aussie dollar, sure. And dollar cat, okay. Okay, let's go to weekly chart Aussie dollar. Okay, Aussie dollar weekly chart. Now, what I like about the weekly chart is that there are signs that the Aussie dollar is reversing to the upside on the longer term basis, okay? So, if you look at the signs, firstly, you can see that it makes some form of a double bottom. Okay, some of you might argue, yeah, it's a bit of a lower low, but it looks a bit more of a double bottom. And if you look here, there was a bit of a divergence as well. So you can see that the swings is a bit lower low or double bottom, but on the MACD it's a higher low. So first sign that a reversal is coming, bullish divergence on the weekly chart. Okay, second sign, let's delete this. So that's number one. Number two, you can see that this high here, the level was around the 7350 area. This high was broken and the market has made a higher high. Okay, a higher high is very significant for a reversal to the upside. Higher high. So that's number two. Number three, you can see, you can compare, oops, sorry. If you compare the low here to the low here, another signal that the market might be reversing is a higher low. Okay, so three reasons why you can tell that the market is reversing on a longer term basis. Plus, if you draw a horizontal line across here, you can see that around the 68 to 70 cents area, these two lines here, alright, there's a lot of support around here. Okay, that's why it bounced off from here. Alright, so what you want to do, so this long-term perspective, okay, it seems that it is reversing, but because it's a long-term chart, it will take time. Doesn't mean that where we are right now, it might just shoot all the way up like that. No, it doesn't work like that. Okay, weekly chart takes time. Okay, my old trading guru used to teach me that for a weekly chart to turn around, right, it's like you just imagine like a old person getting out of a bathtub. Okay, no offense to any older people there, but it's just imagining how slow the whole process of getting out of a bathtub for an elderly person. So it takes time. Okay, so what you might want to expect is that you can expect it to consolidate and mishmash here around here, then it will go up. Okay, it's a possible scenario. All right, but what I like is that it makes a higher low, it made a higher high, and you might start pushing higher and higher from here. Okay, so there's the weekly chart. Now let's go to a daily chart. Okay, so this is the daily chart. Now, the daily chart has shot up quite a bit. Okay, so let's see where's the next resistance. Yeah, it's quite news driven because of the rate statement and things like that. I think last week was a jobs report. But it seems that it wants to go on to touch around the 7450 to 75 cents area. Okay, you can see the daily chart is reversing a bit, higher low. Okay, but you see it's turning point. I wouldn't go buy it right now though, even though for intraday trade. So let's look at the 4-hour chart. You can see the 4-hour chart is a really nice reversal. See, higher high, higher low, higher high, higher low, higher high. Looking for another higher low. Okay, if you're looking for intraday kind of setup, you can see. Let's see if there's any retracement. Okay, the risk to reward is not that good. So let's say. Let me draw a line across here first. Okay, so the risk to reward, take note, the key resistance is around the 74.50, 75. So 74.50 is just 10 pips away. Now, if you're going to retrace, let's say you want to take the trade, and we take it from here, right? You need to ask yourself, is your risk to reward at least 1:1? Because there's resistance in the 450, there's resistance in the 5, and if your stop loss is below the previous swing here, it's a bit negative risk to reward, isn't it? Okay, so as bullish as it looks, alright, I prefer to be a bit more patient on this one and see what happens for Aussie dollar. Okay, maybe somewhere here, if it comes back down here, then maybe we can try to start taking up again. Okay, but this is a 4-hour chart. Yeah, but it definitely looks bullish on the daily and 4-hour chart. Just be a bit more mindful of the resistance area here. Okay, so if you're going to retrace it, I prefer to let it retrace back to close 74 cents before taking it up again. Alright. Monthly. Sunil, are you talking about monthly Aussie dollar? Sunil, yeah, you're talking about monthly on Aussie dollar? Or? Yeah, John, I mean, on hindsight, it's so easy to trade. On hindsight, we'll all be millionaires. I wouldn't be sitting here doing webinars if I can trade on hindsight. Okay, yeah, John saying in 1 hour there's a lot of entries you can take. Exactly. I mean, you can see that. You see the nice flat level that broke out and went up again. And you can see all these high lows. Yeah, I mean, on hindsight, it's always nice, but it's always good to look back and see, where could you have entered and things like that. All right, one exercise that you can do if you want to fine-tune your price action strategy is to go back over the weekend when the market is closed and just go through some pairs and see where could you have entered when the opportunity presented itself, just to familiarize or to so-called brainwash yourself on what's a good setup. Okay, because I mean, most of us are working people, right? So sometimes we miss a lot of entries here and there. Okay, monthly chart or Aussie dollar, sure. Let's see. Yes, I'm on the monthly chart. So the support around 70 cents was here I was talking about. See that? You see the support here, resistance here, and potential support here. You can see clearly on the monthly chart the high low that's formed as well. So that's why I say if Aussie dollar breaks the 70, this swing high clearly, right, around the 76, and then I'm not surprised if we retrace back all the way to the 80 cents level. Okay, but it's showing a sign of reversal, slight reversal. Okay, is that what you're looking out for, Sunil? Because of the higher low. Okay, so I'm not surprised if we go back to 77 cents or so for the next few weeks. Unless fundamentally something changed, of course. Okay, Lena, dollar yen. Sure, let's go to dollar yen right now. The yen pair is another joker, right? This is BOJ cannot make up his mind on what he wants to do, and this week, right? The beginning of the week, I was so eager to look for shorting opportunities on Swiss yen and Euro yen, but when Monday market opened, I changed my mind because the whole thing just reversed. So, so when you are planning trades over the weekend, you still gotta be flexible to see if things changes. Because Euro yen and Swiss yen, a lot of them broke new lows on the daily chart. Okay, but the manner of it, we trace on the Monday, Tuesday sessions. I'll be a bit more concerned on shorting it again. Okay, dollar yen. This is a weekly chart. Let's see. So weekly chart, see all these circles that I drew from the previous webinar. Still in a downtrend. Low, 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 high, low, 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 high, low, 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 high, low, 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 high. Okay. Right now, the interesting thing is, last week, even though when the market made a push down, there is no new lower low. In fact, it's a double bottom. And if you look at the MACD, this is what I call a classic bullish divergence. You see MACD, higher low swing, double bottom scenario kind of price action. So a bit of a bullish divergence there. Now let's look at the, if you zoom out a bit, you can tell that the 105 level, around the 105 level is quite a key support level as well. Okay, so you can see multiple reasons. I mean, the more I look at the MACD, the more I see the divergence is quite clear. Look at this. It's a very clear divergence, bullish divergence. Okay, so that's the dollar, this weekly chart for you. Let's go down to the daily chart. So right now, the daily chart, let me just delete some of the old circles. Yeah. Alright, you can see that the daily chart is a very clear bullish divergence as well. Look at this. Double bottom, but very clear high low. It's a very significant high low. Okay, so you can see that the daily chart right now, it's it looks a bit more bearish, but I would say that we might enter a period of consolidation for dollar yen. I'm not surprised if make a push higher back to 110. Okay, yes, there's bullish divergence, but from where we are right now, I think the market might come back down a bit to about 106, 107, and then we might push higher again. So that's the daily chart. It's a bit more consolidating, nothing much to infer here, because the momentum is still towards the downside, even though there's a bullish divergence. If you look at the 4-hour chart, you can see that, okay, you can see that the market has shot up quite a bit. Okay, so what I anticipate is that there's a bit of, let's see, is there any resistance here? Yep, there is. Okay, around the 107.80 to 108 level. Okay, there is resistance over there. Okay, so I'm not surprised if there's a possibility for intraday trade short to maybe back to these levels here. And then from there, I think the market will start consolidating. Okay, in fact, there was an intraday opportunity somewhere here as well. Okay, this is a counter trend kind of trade. Alright, but basically this might present a short opportunity to maybe around the, around the 107, somewhere here, before the market might start going up again. Okay, because of the weekly divergence. Okay, so that's dollar yen. So just take note of these levels. Okay, right now the 15-minute chart has not turned around yet. Okay, you can see that the 15-minute is still making a series of high, 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 low. But just take note of this level. Okay, let me go to 1-hour chart. If you're planning to take the short trade, right, the key thing is that the chart must turn around first. Now what I like is that it has made a double top here. Okay, but the previous low is this. Okay, so on the 1-hour chart, I want it to break this low first, come back up, and then hopefully start going down from there. And then your entry can be here. Okay, but this trade plan is more of an intraday kind of trade based on the 4-hour chart. Alright, you can see quite nice resistance around here. Okay, but sorry about that. Don't be too happy to try to short all the way back to previous low. No, okay, because again, the higher term time frame, there's very strong bullish divergence. Alright, Nina? So I hope I'm not going too fast because you guys don't stop me, right? So you keep talking, but I'm combining daily, weekly, 1 hour, 15-minute, 4-hour. I mean, my webinars normally I just stick to weekly and daily, right? I just try to give swing trade opportunities, but there are not many swing opportunities in the market right now. And I got some feedback that, you know, most of you are intraday traders, you want to look at more intraday kind of things. So I'm just putting everything together in terms of looking at the weekly chart, daily analysis, looking at 15 minutes. So I can be saying that on the weekly chart I'm short, but on the 15-minute chart I'm long. Okay, I'm saying that not because I'm confused. It's just that different trade plans can go different directions, and there's still a way to make profits from both ways. All right. Baju, dollar sing. Adeline, I'll do gold as the last one. Okay, so let's do just 2 more because the time is running out. So if you're a bit confused on my analysis, go back and watch the recording. It will be uploaded soon so that you know what I'm looking at in terms of planning a complete trade plan. Dollar sing. Okay, let's go to weekly chart first. Okay, let's see. Kind of tricky. Dollar sing. See what's going to do. Okay, dollar sing to me is a bit more consolidating. I would like to see what happens at this support level here. Okay, anywhere close to the previous low around the 134.50 or so. Okay, in terms of weekly chart, it's a bit more consolidating. It was in a downtrend. Okay, and then it made a significant higher high. Okay, so right now there might be a higher low. The question is where's the higher low? So anywhere between 134.50 to 135, I'll be very keen to see what's happening here. And because there's a bit of a trend line support as well. Okay, MACD looks good. Okay, this is a weekly chart. Let's go to the daily chart. Okay, remember this 134.50 area, so it will be somewhere here on the weekly trend line. Okay, in terms of the daily chart, daily is in a downtrend. Okay, because you see this low, it has broke a significant low here. Okay, so what might happen in the daily chart is that it might come down to this level here. This level I'm looking at as support. Alright, in terms of MACD, no, there's no divergence, nothing like that. Okay, so just take note of this level support here. Let's go to the 4-hour chart. Okay, 4-hour chart, yes, 4-hour chart is definitely on the downtrend. So 4-hour downtrend, daily downtrend, weekly a bit more consolidating. Okay, but again, the key level of support I'm looking at is around the 134.50, which is somewhere here. Okay, somewhere here. So if you can take any pullbacks to around the previous resistance area, okay, and then try to take it down back to this level here. Okay, let's see if there's any resistance up here. Yep, this is a very nice resistance area somewhere here. Okay, so near the resistance, around the 13550. I think when we reach there, the moving average should catch up and you might make a push lower. Okay, but just be very mindful of this so-called support trend line here. But I think there's legs to go down all the way to around 134.50 or so. Okay, Lina, yep. Okay, sorry, Raju, Dollar Sing. Is that alright, Raju? Brian got a question. Okay, let me just do a quick one. Aussie Kiwi, right? Going back to the Aussie Kiwi, looking at the 4-hour chart, price seems to be atop the bearish channel. There's bearish divergence on my stochastic. Does a push down seem more likely? Okay, Aussie Kiwi 4-hour. Where's my 4-hour chart? Can't remember what was my analysis on the Aussie Kiwi downtrend. Okay. Okay, now when you say push down, right? First things first. Where's the? Thanks for coming, Bimo. Okay, where's the bearish channel? On the 4-hour chart as well? Okay, doesn't matter whether 4-hour chart. Are you looking at? Hold on, yeah. I'm just trying to see what channel you're looking at. You're looking at this? Okay, yeah. I mean, whether it's a bearish channel or not, the key resistance is still this line that I drew here around the 107 area. Okay. Your stochastic has bearish divergence. I don't use stochastic. Yeah, I mean, bearish divergence on the 4-hour. The manner of how the Aussie Kiwi pushed up so strongly, right? I'm more inclined to think that the shorter term time frame, like the 1 hour, okay, might react off the first level of support, and we will test the high of around 107.20, 107.30 again. Okay, so there's a good 20-30 pips intraday. So for the Aussie Kiwi trade plan, it's more of an intraday trade plan based on the 1 hour and 4-hour chart. Your 4-hour stochastic might show divergence, which I don't deny it. But I would say that intraday wise, there's still a trade to the upside, maybe back to previous high, and then maybe yes, it might slowly fall back down, maybe back to the bottom of the channel. Okay, but intraday wise, there might be a trade plan to the upside to the high of 107.20 or so. If it breaks the key resistance, then I would say the divergence stochastic, the bearish divergence stochastic is wrong already, because a key high will be made if it breaks the key resistance of 107.20, 30 or so. John, you're talking Aussie Kiwi. We've been talking about Aussie Kiwi for the past past 15 minutes, say. We're talking about Aussie dollar. Hold on, yeah. Okay, let me just go to gold. Adeline, sorry about that. Okay, let's do gold before we wrap up, okay? Because we're running a bit late. Okay, so this is gold. Now, if you look at the weekly chart, right? Gold analysis is rather straightforward. I like gold a lot. Do you guys see the trade idea that my marketing site posted out about silver? Okay, so silver was quite a key level. I'm looking at 1600. Okay, weekly candle didn't close. Same thing for gold. The key level was around 1200. Okay, of course the NFP helped to push it up. But if you look at the monthly chart, right, this is long-term perspective, But if you look at the monthly chart, okay, you can see that it has made a significant higher high above the previous high. And most probably right now, we'll push back to the previous high around the 1280 to 1300 level. Okay, but the monthly chart is very straightforward. If you take a look at the weekly chart, you can see that it struggled a bit. Okay, but the key level to me that I was looking out for, let me just delete some circles here. Okay, the key level that I was looking out for since last week was, because last week it came down, right? Okay, because the talk about the Fed rate hikes, people was thinking that the Fed might hike rates in June, so it came down, and to me the key level was 1200. Okay, if you notice this low here and this low here, for me the previous low has not been broken. Okay, because if it breaks I want to see a weekly candle close below the 1200. That did not happen. And of course, the NFP caused it to push higher. So I'm more inclined to think that this support is still respected. Therefore, I'm still a bit leaning towards a bit more bullishness. Okay, so NFP, this was caused by NFP, this big weekly candle. Not surprising, of this support level. If you take a look at the daily chart, okay, you can see that there was a big reaction. This was the NFP reaction. One thing I'm looking out for, let me just adjust this line a bit, sorry, is for it to retrace back to the 12230 level, and then from there I will look for the lower time frame and hopefully can push it up from here back to the previous high at least. Okay, so this is what I'm looking out for gold. I'm leaning towards more bullish because the 1200 level seems to be quite expected. Of course, if the Fed decides to be funny and hike rates in June, then of course the whole technical analysis will change. Okay, but if everything stays put, there's no big fundamental changes, then I'm more inclined to be bullish. So I'm looking at this 1230 level. I'd like for it to react off and push to the next high, the previous high, around the 1280, 1380. Okay, so that's for gold. Same thing for silver, very similar analysis. Alright, if not, I exceeded my time at 10 minutes, but so I mean, not many swing trade plans out there in the markets. Alright, it's just the way the market is right now. So just look out for intraday setups. Same theory, same strategy, but just always be mindful of your risk, as well as yeah, the risk most, but especially as well as news, especially all these talks of Brexit and things like that. Okay, always protect yourself in such market conditions. Okay, so I hope I covered a bit more on intraday trading today so that you guys can have a new perspective. If I go on too fast again, I'm so sorry, but feel free to ask more questions next time, and always watch the recording if you need more clarification. Okay, if not, thank you so much for coming by for tonight's Market Talk. My name is Nabil Mata. I'll see you in 2 weeks' time. Happy trading. Take care.